Hello and welcome to the episode of Monday Markets. As always, they're brought to you by Woo. Links available in the description below. Let's talk about BTC and ETH today, and maybe Sol as well. Less of an altcoin focus. We'll save that for Thursday. We've had the monthly close for BTC. It looks good on the monthly. I don't think there's a strong or any kind of bearish argument to be had on this time frame. We had a monthly close above and retest at 58.8k of the former range high. And while it's been a bit of an agonizing range between 60 and 70, the higher time frame levels are still holding, and I think any bearish picture on the monthly would have to be on the back of a failed breakout of some sort. For now, we've had a bullish retest, and now that we've spent 2-3 months here, if this is a true reaccumulation, it should get moving quite quickly. I like to use the example of 10.7k. Again, not a perfect analogy, but here it was, more or less 3 months at the level before we got a large move. I don't necessarily think we're in for something like this, but purely structurally, I'm not going to overthink this breakout and retest until it gives me a good reason to do so. The weekly time frame is slightly less clear. It's a bit of a toss-up, I think. In the past, you'll recall for some weeks now, we were focused on this cluster between 67.2k and 69k. So the weekly close that we had was interesting because it was rejected by the cluster top, but it held the cluster bottom. And this is a narrow enough range as it is, so I don't want to read into it too much. I'd rather get a clear candle close through the entire structure, not just a single level. So like a clear breakout candle or a clear breakdown candle through this for some sort of weekly bias. And in general, my lower time frame trading around the mid 60s has been fantastic. So unless I see something I really like, I'm going to refrain from punting it, at least on this time frame and using these levels. Some of the intraday stuff has been good, and we'll talk about it. But on the weekly, not really a signal time frame for me for the time being, given resistance kind of resisted, support kind of supported, and we've spent 2 weeks at those levels now without much of a move. I think the daily is probably the most instructive. Unsurprisingly, it's still within the same consolidation. Like if you just zoom out and look at the structure, it's fairly self-evident. I'd like to think that the market went from a period of trending now to a period of consolidation. So, your setups and trading systems should be accounting for that. I think my best guess as to how to pass this daily consolidation is using the range boundaries that we discussed on Casual Friday, essentially some version of 61.2k to 73k, and as also discussed on Casual Friday, I think in this instance, given how much price action we've had, towards the range high, we spent a lot of time there, towards the range low, God knows we've spent a lot of time there, and I think going back down there would, I mean, this is like the funny meme of this channel. Every time at 61k, we just bring out the bear tard stuff and say, don't short it, but also it looks like a dodgy support, and then it goes up, which is quite funny. But I think in this instance, just all jokes aside, I don't really see what setup could trigger at 61.2k unless there's something really outrageous going on. Every single possible setup that you could have wanted at that range low has already played out. You had like the wick tests, you had the strong engulfing setups, you had the failed breakdown spikes with all the candle bodies respecting the close, you had the failed breakdown and retest. It spent a lot of time down there and really shouldn't be making its way down there if the market is strong. And so given that the range low at the moment is a bit of a non-starter, what is getting in the way of the market getting back down there? So I think in this instance, because the range low is so washed up, like myself and Don and a bunch of other people, XD in the chat, because it's so washed up, we have to sort of move our eyes up to more recent levels. And I think this is one of those instances where the range midpoint makes more sense as a pivot. In general, when you have a large consolidation, the go-to argument is do business at the extremities, because that's where you're going to get your best setups, the best proximity to invalidation, and where trend forming or trend reversing moves are most likely to originate from. But in this instance, especially with regard to the range low, because we've spent so much time here and have had so many setups there, I think this is one of those instances where the range midpoint makes for a better bias level, at least for the for the purposes of weekly show, than looking all the way back to the range low. And even if we didn't have the range midpoint argument, I think from a basic support resistance point of view of previous highs turned to lows, that's kind of good enough for a weekly framework. So as long as that level continues to hold and we don't get any daily closes below it, I still think it looks pretty constructive. The range low took a beating. It held, ended up making its way above the midpoint. In general, this kind of range progression, you'd look for the range high and look for the other side of value, so to speak. I will make one sort of practical trading note. I don't know how much you enjoy these in general, but the daily time frame is somewhat misleading because if we look at it once a week, you might think that these moves are playing out very smoothly, like, this failed breakdown, retest, and retesting the range midpoint before this move up today, etc., etc. But you have to realize, especially if you're entering even first test, best test type of setups, this shit can take a while to play out. So for example, if after this big breakout through the range midpoint candle, you were very patient and you bought the first test of the range midpoint at 67k, which was on this day here, you've essentially waited almost 2 weeks and price is more or less not too far from your entry, right? So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And this is the 12th day and the market hasn't really even pushed to the other boundary. So if you're going to be daily time frame trading levels, they make for fantastic levels for trading, but they're not going to teach you patience. So one thing to do is if you follow that type of system where you sort of work your way down progressively from higher time frames for mapping, etc., and lower time frames for execution and so forth, there needs to be some sort of synchronicity or synergy between these two things where your expectations amend with the time frame, which is to say that just because you're using the low time frame for entry doesn't mean you disregard the high time frame. It is a low time frame entry of a high time frame setup. So when it comes to trade management and expectations as to how quickly you expect the market to resolve or move, a lot of the time what happens is because you're doing this high time frame to low time frame progression and you're executing on the low time frame, you sort of put on your low time frame hat and start to view all price action from a low time frame perspective. And if you have one slow day, one slow session, you think, oh god, this really isn't moving, fuck it, maybe I'm wrong, I'm going to close early. Whereas I think in general that's a mistake, because the low time frame is just a means to an end, and the end is getting a high time frame setup that needs high time frame management rules. So that's just a bit of an insight as to, when you're trading daily levels, even if you're executing on lower time frames, you kind of have to give them a bit of time and space to breathe, to correspond with the fact that at the end of the day, the core idea is a high time frame level, which can take longer to unfold than your execution time frame. So yeah, that's sort of it for BTC. Within this consolidation, you could start marking out range within a range type of thing, but I don't think it's too relevant. Even looking at the 4 hour, if you bought this retest, went up, back to your entry, up, back to your entry, up, like if you're trade managing this very aggressively on lower time frames, you're going to have a very rough time with it. I'm not really interested in being a seller as long as the range midpoint acts as support. If anything, I think the contrary is true. I'm not sure what bullish setups would look like in this exact instance, given we've spent a lot of time at the range midpoint. If you want to rebuy it on a good daily, such as a sweep, a spike of some sort, something risk defined, I think that's tradable. I think the only the only instance in which this would be short term bearish is if we start getting daily closes below the range midpoint. I think at that point you can argue that you get a midterm bias shift and the bullish idea, whatever, you can revisit that later. One thing that helps with that is that the daily closes at the level have been really clean, so we haven't had any fake outs or any sort of shenanigans on the daily time frame with a close below, close above, or anything of that nature. So I think daily closes are worth taking at face value given that. Otherwise, the lower time frames basically show the same picture as the higher time frames. Unsurprisingly, the levels still work just as well. And general view is that above the range midpoint, range high is still the gradual target, but getting an entry and being patient within, as always, is the trickier part. That's really it for BTC, I think. Let me know if that makes sense. As far as ETH goes, ETH BTC is down a bit. A lot of the ETF speculation has just kind of slowed down. We're in waiting mode to see when these forms get filed and when the ETF actually starts trading, so on and so forth. Nothing too crazy on ETH BTC. There was a weekly level I was looking at, which I've lost completely now. Oh yeah, it's the 057 weekly. I still think that's a pretty good level of resistance. If you want to be really conservative, you could just mark out this market structure high here and argue that you want to see a higher high before having expectations of larger trend reversal. Because again, the preceding context here is a really long, really aggressive, well, not really aggressive, just like a really long and strong downtrend. So if you want to move up your requirements for reversal, I think that makes sense. I think we've made some good progress in the first reclaim that seems to have stuck back above 052, but ETH BTC is always kind of given the market a hard time. ETH pumps and everything else suffers. ETH pumps even on good news and then just kind of struggles to keep momentum. It's been a bit of a bitch to trade, to be honest. But nothing too bearish or I think weak on the ETH BTC side. More, I think the market is kind of in pause mode with regard to ETF flows and things of that nature, which brings us to ETH USD. The monthly time frame I don't think is particularly useful or instructive on this pair. I think the weekly time frame is the best, and there are two areas specifically that I like. One is this level that we've had since 1982, which is the 3928-ish weekly level. Classic structure that we talk about on the channel. We've got resistance, some sort of overthrow, and eventually the market comes back and retests not the overthrow portion, but actually the original level of resistance itself. So that's really the only weekly area that I think is standing between the market and all-time highs. purely from a trading perspective, if you're a breakout trader or looking for strength continuation through key levels, I think 3.9k, and you could even extrapolate that to 4k round number, is probably a good one. Absent that, the only other area that I find interesting is this daily time frame 3600-ish, and if we start getting slightly more granular with it, I think it shows, well, I think that demonstrates why it's so important. So on the daily, this was the previous sort of range high. We've had a fake out above, you know, just like we discussed on the weekly setup. Resistance, 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 overthrow should have been resistance, but instead was flipped to support. So I think that's your line in the sand for Ethereum bias. I don't have any macro views as there is the ETF a bottom signal, top signal, is it going to outperform? I probably need to do a bit more thinking to be completely transparent on that note. But the TA has been good enough, so I haven't had to think too hard, which in my case is probably to my benefit. But this gives us like a really clear map of the market, essentially, using these high time frame levels that make a lot of sense. So the weekly 3900/4K, and that's been pretty solid resistance on the whole. And then I think one of the most self-evident levels in the market right now is 3600 weekly, daily, 4 hour. I mean, on the weekly, on the daily, it's a nice level, but if you look at it on the lower time frames, even these previous lows, yeah, this triple top breakout, like it's very, very clean. And even if we look at more recent price action, I think that's gifted us a pretty nice 4 hour cluster, essentially here with the, I would use the lowest close in the wick, to be honest. So 3620, 3660-ish. I really think that's the only area to do business on ETH. If it's really strong, then it shouldn't go back there, and you know, should have no problem just kind of marching its way up and pushing resistance. But if you're sort of more greedy with entries and looking for more trader oriented entries, as opposed to lol, we have an ETF coming, just hold spot and fuck off, which is a totally plausible position as discussed on Casual Friday. If you're on the future side, perp side, short term trading side, whatever, I think something that would be, well, the only setup that comes to mind is if we take the more recent range low at 3700 and get a very shallow breakdown into the higher time frame 3600 level, and then you get something risk defined at the lows, like an outsized volume bar, delta print, close below, close above, whatever entry techniques you use. I think that would be a good trade for two reasons. One is because, as mentioned, your risk will be defined for you and you're actually entering at higher time frame structure. And the second reason is that given how the high time frame picture looks, and if the ETF even looks anything like Bitcoin's ETF run, normally when you enter lower time frame setups, you take them to lower time frame-ish targets, or at the very least you manage them more aggressively. But in this instance, we know that A, this level comes from the higher time frame, so that kind of buys you some space in terms of your target, and B, I think because of the ETF, you could justify holding the trade for a trending move, even if you typically cover it at the first level of resistance or whatever else. So big picture view, I think it's worth giving the whole ETF narrative a shot. I mean, it's going to be very hard to beat Bitcoin's performance ETF-wise, but even just the front running of ETF flows made BTC continue to go up for weeks and months, even though we had a ton of chances to front run it. So looking for some ETH upside with a real ETF shouldn't be the most insane proposition in the world, but it's ETH, so who the fuck knows. Fundamentals hat aside, purely trading hat on, I think 3600 is the only / must hold level on this thing. If there are any good setups, I think they'll come from 3600. If it just continues to sort of curve up and show strength, then you're gonna have to probably breakout trade whatever that level was, closer to 4K, and chase it. So that's realistically what's on the horizon for ETH. The final one I'll mention is Solana. I'm not really focusing on Sol ETH particularly closely, but the level that I like on Solana is most visible, I think, on the daily time frame. There's just a really nice sort of conglomerate of levels at around 170. Not only is that a weekly level to some extent, if I add it here, it should line up roughly with weekly structure. The sort of top side of this cluster here, so sort of mini support resistance flip at the Pico top, and then it nuked. We had a failed breakout above it, and now that's resistance again. Somewhat convoluted, but I think the daily level adds some credibility to that weekly level, because that's a pretty self-evident sort of previous floor, tried to reclaim it, and then really precise price action at the level itself. So if you're looking for Sol outperformance relative to ETH, or pair trades, or even just USD pair positioning, I think the best technical level to give rise to that view will come from 170-ish. I'm not so fond of the support levels below that. They're not particularly clear to me. If I really had to reach into the magician's hat and pull out a bunny, it'd be some version of 160, just because it's pretty clean and there was a nice flip there earlier. But you know, there isn't a lot of space between these levels here, so I'd rather defer to the higher time frame. 170 is the pivot for Sol, and that's where I think the setups will come from. Everything else support-wise, if the market goes lower, I'm not a huge fan of. of. That's all I've got. Tried to keep it somewhat dense and concise. Let me know if that makes sense. Thank you for your patience and waiting for Monday markets. Hope it was somewhat worth it, but who knows? I'm just rambling at this point. Thank you to Woo for supporting the show. Links are available in the description below for a centralized exchange trading experience. If you want to see some more stuff from them or have feedbacks, or if we should spam some giveaways and give you some MacBooks or something, let us know in the comments as well. But it's the most straightforward way to support the show outside of liking the videos, subscribing to the channel, so on and so forth. Hope you all have a wonderful start to your week, and I will see you for Altcoin Thursday, I hope.